What's up everyone, it's Scotty with Money Vesting. In this video, we are going to be talking about Home Depot, and I will be doing a quantitative analysis on this company. We'll talk about the revenues, the earnings, the cash flows, the balance sheet. We'll talk a little bit about the upcoming earnings that they're going to be reporting on Tuesday before the market opens. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. There is a 16% annual discount that you can take advantage of before the month is over. So links are going to be down below if you're interested in joining us. So Home Depot is going to be reporting on May 16th, Tuesday, for the first quarter of fiscal year 2023. And they are going to be reporting pre-market, so at around 9 a.m. Eastern. I'm sure it's going to be a little bit earlier. That's when the webcast, I believe, is going to start. But of course, it's going to be very important. It is a pretty big retail week. So we've got Walmart, Home Depot, Target. A lot of these companies are going to be reporting earnings this upcoming week. So this right here is going to be the expectations for EPS and revenue. Revenue is estimated to be just over $38 billion, with EPS coming in at just over $3.80. Home Depot is kind of very much in line with where the housing market's going, right? So there's a lot of construction happening. Of course, Home Depot sales are going to boom. And if there is a pullback in the housing market, if there's not as much construction happening, homes under construction start to go down, of course, Home Depot is also going to see that be reflected in their actual numbers. But we have seen 17 downward revisions in the last 90 days. So we have seen a pullback in the EPS expectations from investors. Now this right here, for the entire fiscal year 2022, they did grow revenue by over 4.1%. That was up to $157.4 billion. And net earnings, which is their bottom line, actual net income, was up to $17.1 billion, or $16.69 on a diluted earnings per share basis, compared to $16.4 billion and about $15.53 in diluted earnings per share in the fiscal 2021 year. So this right here is the guidance. So the growth, you'll notice, has been very, very small, right? It's a modest growing company. It's not a high growth company. It's not like a 20-30% grower, but it is about 4 to 5 to 6% growth in this business. So as I see, Home Depot is very much of a value / dividend stock, because they do pay close to a 3% dividend at the moment, considering that the price is trading at $290 a share. So operating margins, they're expecting somewhere around 14.5%, and then for tax rate, 24.5%, and diluted earnings per share decline to be mid-single digits, and sales growth and comparable sales growth to be approximately flat compared to fiscal year 2022. So they're expecting flat revenue growth and EPS to slightly decline in the mid-single digits. And that's also what's been priced in by analysts for Home Depot for 2023. So this right here is going to be their income statement. Again, you can see that 4% growth on revenue on the top line. Gross profit was up 3.8%. Operating income was up 4.3%. This is for 2023 versus 2022. And this right here, net earnings were up 4.1%, and basic earnings per share up 7.4%, and diluted earnings per share up 7.5% to $16.69. If you take into account where the price is trading right now at $290 and do the math, 669, and then we're trading at 17 times trailing 12-month earnings, which in my opinion for Home Depot is a little bit high, considering that the growth rate is nowhere near close to 17%. It's obviously a lot lower. So I do think that it's trading at a little bit of a higher valuation relative to its growth rate. In fact, to give you some context, PayPal trading at 12 times trailing forward 12 times forward earnings multiple, when the growth rate for the earnings per share is expected to be way above 20%. So just to give you a little bit of a comparison, between these two companies. Now, this right here is going to be the balance sheet. Of course, they're not comparable. They're in completely different sectors and industries. But just to give you a little bit of an idea, that Home Depot at 17 times earnings growing at 6% definitely does seem a little bit on the higher end. Now, when it comes to total assets, $76 billion is what they have. And cash is only $2.7 billion off that $76 billion, versus long-term debt, which is going to be sitting at just over $41 billion. That's a pretty substantial amount of debt, and the company has, and very little cash on the balance sheet. So certainly a positive net debt for the business. And this right here is just going to be going over a little bit of the history. So $78 billion growing to over $157 billion. So they've more than doubled their revenue in the last 9 years. Gross profit has also gone from $27 billion to over $52 billion. And operating income has also gone from $9.1 billion to $24 billion. Every single year they've managed to grow their numbers. That is phenomenal. That is absolutely incredible growth in terms of the numbers, but then also execution of their business has been very strong as well. You can see the operating income just consistently growing. And these are the type of numbers that we look for, right? We want to look at consistent, predictable growth for this company. And again, net income just absolutely phenomenal. I mean, it's, well, like absolutely great. $5.3 billion growing to over $17 billion is consistent growth here, more than 3 times in the last 9 years. And another really very good part of this business is the consistent share buybacks. So they are using the money that they are making to buy back shares, and that's gone from 1.4 billion down to as much as 1.25 billion shares, 1.025 billion shares for the company. Now, moving over to earnings expectations. Now, what does the future has in store for Home Depot? So earnings expectations are going to be a bit of a decline in this fiscal year 24, about 5.66%, EPS to $15.75, to as much as $28 by the year 2033. So that's going to be about a 6% growth rate for the company. So if you plug in those numbers into our spreadsheet, you'll notice that the analysts are pricing in about a 6.56% growth. Let's just do 2029, which is going to be $22.99. So let's just do $22.99. That's going to be 2029. So just a little bit over 7.8% growth for the company over the next 5 years, and then over the next 9 years, a little bit under 7%. So those are some of the estimates that we're going to use when we are looking into the company's future potential earnings. Revenue is also expected to grow from $156 billion to over $221 billion. And this is the valuation that I went over earlier, about 17 to 18 times earnings, trading on a little bit under 2 times sales, just over 14 to 20 times cash flow, and enterprise value to EBITDA also at 12 to 13 times for the company right now. And then, of course, we got the margins, decent profitability, I would say 33% gross profit margins. Net margins are just over 10%. That's pretty good. And very nice return on capital, return on assets. So a very efficient business with a very strong return on capital and assets. But this, of course, is the net debt sitting at over $50 billion at the moment. Not the best balance sheet. Now, if you go over to the expectation, by the way, this right here is the share buyback. So they have been able to buy back about 3.6% of their shares every single year, right? So they're pretty much, buying back shares every single year. They're not diluting shareholders. So I've plugged in about negative 4% for the company. So when it comes to 2023, analysts are expecting about over $16.2 billion net earnings or net income. That's going to give us an EPS of a little bit under $16 per share. So now when we do our estimates for growth, I'm not going to go with 7 or 6%. Let's just do a moderate 5%, or let's just do 6%. I think 6% is reasonable for growth rate for Home Depot. The discount rate, I'm not going to go with 12% because they do have a dividend yield of close to 3%, so we can have a little bit more flexibility in that number. Let's just go with 9% here for the company in discount rate. Margin of safety, that's going to stay put at 10%. And now when it comes to the PE multiple, that's really what's going to be the big key driver for the company. I think 17 is a little too much. Let's just go with 15 here, see where we end up. And the fair value ends up at $228 per share, with the price right now trading at $290 at the moment, representing about a 28% overvalued at the moment. So, it would need to come down 21% before I would be interested theoretically in buying this stock. But of course, I'm going with a little bit of a higher P multiple. If you go with, let's say, 14, we come down to 213 and so on and so forth. I'll go over the sensitivity grid in just a minute. But this is going to be that flexibility range plus minus 5% at 203 up to as much as 224 for the company. And this is the sensitivity grid. You can kind of look at the different growth rates and the different P multiples for Home Depot and kind of figure that out for yourself, what makes more sense to you. But for me, I think 12 to 14 times P multiple with a 4 to 6% growth is reasonable. So this is going to be my sort of grid where I would be watching, like, around 166 to 213 is going to be around those levels where I would be a lot more interested in buying that stock. And right now we're closer to over here. So this is where we are. And this is going to be my sweet spot for Home Depot as a dividend stock, as a value stock in the future. So that's going to be some of the levels that I'm watching. Now, coming over to the technicals, you'll notice that we are once again coming down to its moving averages, and Home Depot was in fact, technically speaking, very, very strong. You'll notice that, since 2011, it has consistently traded above its 200 simple moving average, 300 simple moving average. In fact, it's up over 1,300%. And right now we're once again kind of flirting with that 200 simple moving average. So this is going to be the entire technical breakdown. And what you will also notice is that since 2011, or since 2008, really since the depths of the Great Recession, Home Depot has obviously consistently gone up in this higher high and higher low pattern. And this is a more shorter time frame, shorter sort of pattern within the context of the bigger trend. And what you'll notice that every time we break down, we come down to the bigger trend, which is the higher low for Home Depot. And right now what we're witnessing is once again the price trade below that level, and it's mostly just consolidating sideways. So what we are witnessing is the price really just trade between 265, which is going to be that support here. That's going to be this level, with that green line, and the resistance is going to stay at roughly around $334. So what we are really witnessing is the price is trading sideways in that range, consolidating. But if it ends up at around 300 SMA, that's going to be in line with $240, $238. That's going to be a very strong area of support for Home Depot, as pointed with this green arrow. So not only are we going to be in this bigger trend, the higher low, but then also that 300 simple moving average for Home Depot as well. So hope you guys enjoyed this video and a complete update, but my intrinsic value is going to stay put roughly in the 213s to low 200s is what I'm going to be watching for this company. But let me know your thoughts down in the comment section below. Are you buying, selling, holding? What are your thoughts on Home Depot? I would love to know. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.